Not right now. I'll probably get to add people later. But this is my first YouTube video. Um, so the first thing that I'm gonna go over is I'm gonna be doing the top tier trader prop firm account. It's a $5,000 account. Essentially, like the metrics for it is that essentially you have a max daily drawdown of $250, and you essentially have a max permitted loss of $400 and a profit target of $400 as well. So those are the metrics. The pairs that I'm going to be trading are going to be, I'm going to be analyzing the US dollar, also trading the Euro USD, essentially taking it like back to basics and just running with it from there. My trading style is essentially just using market structure, support and resistance as supply and demand. If there's any like Fibonacci retracement points or anything like that, I'll be using that as well. But as far as like going with like a top-down analysis, one thing that I'll also be doing is I'll also be using the US dollar as like a reference point, because usually since the Euro USD is paired with the US dollar, one thing I realize is that if I take the like let's say for example the US dollar is bullish, that would mean that automatically the Euro USD is bearish. So as you can see, I'm on the yearly time frame, switch it down to the 6-month time frame because we are in the month of July now. Being that we're in the month of July, we have 6 months left of the year, meaning that it makes sense for me to use this 6 months time frame. Essentially, right now it'd be like halftime. If you wanted to like reference it with like sports or like basketball or football or anything like that, or soccer, of course. And then if you go down to the 3-month time frame, we are on the third quarter. So essentially, I believe around this time is when companies start releasing like or towards the end of the third quarter is when they start releasing information about their yearly earnings. So now if we go down to the monthly time frame, on the monthly time frame, as you can see, I believe in May, price action created a bearish engulfing candle with the US dollar. Price action still has a relatively bullish overall market structure. As you can see, price action is just above 13,000. So on a weekly time frame, as you can see, last week price action has found support. So overall market structure is bullish, and price action has found support around 13,000. It's created like a bullish run, and as far as right now, price action has created a bearish doji candle last week, with this week opening at 13,076, and he has created a 13,000 a low of 13,062, and price action could continue to be bullish as overall market structure is bullish. So on the daily time frame, as you can see, price action has created what is now higher highs and higher lows. Go ahead and chart it here. Higher highs, or higher lows, sorry, higher high, high. So as you see, price action here has created higher. Since it's been price action has like created a bit of a downtrend in May, has found support around 13,000, and has created a higher high around 13,040, higher low around 13,028, and has created another high here, higher low, signaling a bull run. Price action is currently in a counter trend, as it's created a higher high here. Here. So it's created a higher high in this area, and then it's also created a higher high in this area as well. As it seems that price action believe on Friday, June 28th, price action has created what seems to be a higher high as it's touched, or it's nearly touched 13,100. And if I was to go on lower time frames, you could see that price action is going to continue to go bullish, as price action has yet to touch the higher low point right here, as it's going to create another higher low point. If I was to create like a Fibonacci or anything like that just to measure the retracement, it would be a 78.6 nearly. Or if you want to count like the bed where candle is currently, the candle body is currently right now, it's at a 61.8% retracement. So there you go. We're going to lower time frames. Which for me personally, when I'm on the US dollar, unless I'm like in a trade or anything like that, I usually don't go lower than the 4-hour time frame. Just because I don't feel like it's necessary. If anything, I'd be on the actual pair that I'm trading. So for the 4-hour time frames, you can see more in depth on the higher, the bullish market structure. You can see that price action is creating higher highs and higher lows, and you can see more like in depth in that perspective. So moving on to the Euro USD. Being that we're on a quarterly time frame, overall market structure is bearish. If you go to the 6-month time frame, you can see price action has created a bearish engulfing candle in the first 6 months of this year. And if you go to the quarterly time frame, as you can see here, price action has found support around the parity level. The parity level essentially just means that, for example, if the US dollar has found, like, if I was to go to Europe and I was to try to transfer my dollars from from the US dollar to euro, I'd essentially just pay $1 and it'd be the same price. My US dollar would be the same price as my euro. But as it stands currently right now, if I was to go to Europe, my US dollar would be worth $1.07 in euro. So now on the quarterly time frame, price action is open at $1.07, and then you have the pips that follows. Price action has created a bullish engulfing candle on the quarter of October 2023. But when you zoom in onto the monthly time frame here, as you can see that price action has found support around $1, and I'm just go ahead and say it's 1.065. Price action has found support around that area. It has also created a bullish engulfing candle around the month of May. So price action could continue to create higher highs and higher lows, or continue to find some area of like bullish standing on lower time frames. But from where it stands right now, price action has created a bullish engulfing candle in May and has created what could possibly be a counter trend in June, and the month of July could see some bullish price action from the Euro USD. But as it stands right now, the same thing happens with the US dollar, just in reverse. Price action creates a bearish engulfing candle in May, and it creates what could possibly be again a counter trend, as it creates a bullish candle in June, and could possibly be a bearish engulfing candle, as price action could look to again reach the 13,000 level. So now on the onto the Euro USD, we go down to the weekly time frame. Price action has found you see more in depth. Price action has found support around 1.065. Price action now is currently resting about 100 pips from the area of support, where it has created essentially what is not like a star pattern, as the new week has opened, and price action has created usually when you see this candlestick pattern, it could mean that price action will create a bearish candle, as price action has essentially fallen down to 1.07 and has risen 50 pips to 1.75 and could look to fall back down to 1.07. So now going on to the daily time frame, as you can see more in depth, price action has created a jump of about 40 pips from its closing price on Friday, with the closing price being 1.071. Price action has risen to 1.075 and could look to fall back down to the area of 1.071. So with that being said, just so that it can close this gap, which is usually a pattern that I see that happens more than not. So a candlestick pattern would be against a star formation candlestick pattern. And if you go right here, it essentially gives you an image right here. I think it's the opposite of a morning star, an evening stars. I believe it's called evening star. So there you go. An evening star candlestick pattern is essentially when you have the first long bullish candle body, and then it creates a star. As you can see here, you have the bullish candle body, creates a star, and with the next candle, price action creates a strong bearish candle, essentially, right? So with that being said, that is what I am looking for when I'm looking to place my next trade. I'm looking for price action to at the very least create a bearish pattern in order to close this gap and possibly reach a TP level of 1.07. So if I was to plot a trade right now, using what my opinion would be the best lot sizes for this challenge, right, is this right here, looking for a 1 to 2 risk to reward ratio. So essentially, here it is. I'd have a 0.1 lot size on each trade, right, with a stop loss of about 20 pips. So at most I'd be risking $100 risk to reward each trade, with avoiding my daily metric of $250 a day. So possibly taking one trade a day, not really risking too much. So my risk to reward would essentially actually be $50 being risked at each trade. So with that being said, that's essentially like the trade that I'll be taking going forward. So I will tune back in with you guys later in order to show you guys the results of my trade, essentially. So take care, have a good one, God bless you.